Good morning, everybody, and welcome to the Australian Market Preview for Wednesday, 9 December. My name is Carl Capolingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you on what should be a very productive day for the Australian market. Also making you very productive will be 10 free trades when you switch accounts to Think Markets. As it says there, no opt-in required, straight out, $0 a trade. You can look at the asterisks, there's really nothing to it. Apart from that, unlimited phone support, your own holder identification number, and after your 10 free trades, you go back to an $8 flat rate, which is fantastic anyway. So I've given you at least 13 good reasons there to switch to Think Markets. The agenda for today is to check out what's going on with the COVID situation around the world. We'll have a look at some of the key market moves from the last 24 hours. Technical analysis update on the major indices. We'll bring it closer to home, have a look at some ASX companies in terms of dividends, broker moves, stocks of interest, and a special Think technical update there. And then we'll have a look at some of the macroeconomic data. Okay, COVID situation, and we're just looking at the shapes of the charts here. You know, that's what I like to do. I'm partial to trends and charts. And the trend on the US situation, it looks dire. It looks really worrisome, and worrisome not only for the people, of course, impacted by this crisis, and in a more selfish way, worrisome for the upward trajectory for markets at the moment. Hasn't bothered markets in the medium term, but ultimately this remains the single biggest risk factor, I feel, for markets going forward. European cases taking a little bit of a turn higher as well. Good news for China is that their situation is far better controlled. And of course, in Australia, we're doing pretty well also. So really just sort of watching the shape of the chart and then understanding what impact it might have on markets. Very little for the time being. So up 0.2% on the ASX 200 yesterday, a little bit of a mixed bag if you look within the sectors, but I do note gold and technology were the standouts. It's good to see consumer staples and utilities also picking up some gains. That's on the back of some good news from Metcash a couple of days ago, buoying the rest of the sector, really. Having a look at global equities, Asia was down a touch yesterday. The US market's up, but it's more about the shape of their trajectory at the moment, which is looking pretty good. So we've got sustained up moves now, and we've got sustained high closes for the session, which indicates demand is strong into the end of the day, which similarly indicates that there may well be more demand in the system for the next session. Good to see the volatility index coming down. Small gains in Europe, small loss there for the FTSE, but pretty quiet session for equities, but a constructive one. Having a look at the base metals prices, generally high. Aluminium, a little bit of weakness, otherwise not too bad. Copper down slightly. Iron ore, mixed bag in terms of a rise yesterday in the US dollar price, but down early in China on the Dalian exchange. Gold and silver picked up small gains as the US dollar gained ground, so that's pretty impressive for gold and silver. The Australian dollar down just a touch. Energy, well, oil-based energy markets down slightly, natural gas up. US bond yields coming down a touch, which is constructive also for the share market. We talked about the upward trajectory. We talked about the continued high closes on the session, and that's what we're seeing with the S&P 500. The 3640 area becomes support. I can't see any major resistance because we are obviously at all-time highs. If you start to project sort of targets forward, you can push this up from the starting point. Oh, look, let's go 130 points, and let's be optimistic and say we push it up from 3646 gives us 3770 as just a guide. And these are very, very sketchy, these targets, but it's just a guide as to where it might stop, because really we don't know. We're at all-time highs. NASDAQ looking very, very good. Another strong close as it continues its move higher. Unabated, it seems, at this point in time. And these small gains are better than one big gain all at once. It allows the overall positivity to continue, and for us stock pickers to pick good stocks that will do better than the index within this broad move higher. In terms of targets, we could probably draw one here as well. Why don't we? What's that? I'm doing my maths here. That's about 700-800 points. So we could see, say, 12.9, and again, these are very, very rough sorts of targets. Okay, bringing it closer to home. When we're looking at the shape of the S&P ASX 200 share price index futures chart, we're looking for an indication of what might happen today. It's good to see the more bottom left, top right nature of this chart. I think that's constructive for solid gains today, based upon where the SPY closed at 67.21. That's indicating about a 0.7% gain on the open. What we do from there, again, we'll take our cues from the shape of the chart and where we close in relation to the high and the low. And it was good to see us closing very close to the high. So constructive for some good gains today on the market. We should see that 67.14 level taken out. It's inevitable it will. And then we get to look to higher levels. We know there's a small pressure point at 68.97, but really nothing then until we get into 71.97. And that is my target. Could be maybe end of December, could be January. Who knows? Seasonally, this is a pretty good time of the year. I'd love to see it there. It would be fantastic for us to get back to that pre-COVID level. Looking at dividends, nothing today. Press pause, check if your stock is on there. In terms of broker moves this morning, UBS has raised Adairs. Adairs came out yesterday with a trading update, and they increased their profit guidance and sales guidance for H1 FY21. Generally well received here by UBS. They consider the execution risk to be low, given the momentum in the retail sector is likely to continue. They said that the guidance on NPAT was a significant beat. Macquarie has increased its rating, so they have upgraded Ainsworth Gaming Technology, ticker code AGI, from neutral to outperform. They increased their price target from 45 to 65, so that's definitely a nice percentage gain there. They said that the worst is probably behind them. Credit Suisse, a small raise on ARF, a pretty decent raise on Champion Iron. They are in Canadian dollars there. And Macquarie on EHE, that's wrong, Estia Health, that one is, they've upgraded from neutral to outperform. And look, that one is a bit of a dud. But in terms of the price target, there was a small increase in the price target as well. And I will fix that one up when we release, a good plug here, when we release our broker moves update for the day. So let's have a look at economic data now from the last 24 hours. Yesterday we had the NAB Business Confidence Survey, came out quite good. We saw the confidence levels rise from 3.24 in October to 12.38 in November. They are the bars there, so that's the big pop into the green, and best level we've seen really since 2018. So obviously the Australian economy reopening, borders reopening, businesses pretty confident, local retail spending pretty good. Conditions rising to 8.82 from 1.98, a good reading for the Australian economy. We will look at the calendar. Today we've got the Westpac Consumer Sentiment Survey coming out locally, and then tonight, pretty quiet, we'll have US, not a lot going on in the US, but actually today we do have some Chinese inflation data coming out also. Okay, I promised a quick look at some charts to kick you off the day, and just mentioning them, and I guess overall trends and what I would do. Keep it quite simple so we can get this update out as close to market open as we can. So these are my buys for the day. Auckland International Airport. It is one we have featured in Think Technical before. Great short-term uptrend. Long-term uptrend is still down, but it looks like it's about to change. And this is when I like to get these, what I call emerging trends. They have breached their long-term downtrend resistance. They have come back, they have tested, and now they're moving higher again. So that is Auckland Airport, happy to go at current levels. AMA, very similar situation in terms of the setup that it is. So it's an emerging trend. We're hoping, we're anticipating that this long-term trend is going to switch to up. We've got to pull back into the short-term support zone, and we're bouncing off. This is what I like to see, bouncing off that long-term support zone, and happy to go at current levels. AQZ, this is also one we featured in Think Technical before. It's a little bit more bottom left, top right, so it's not so much of an emerging trend, it's a continuing trend. It has broken out of what is a considerable basing range, and now that it is free of that range, the upside, I would suggest, is pretty good. Yes, blue sky from here, so happy to go at current levels on Alliance. Aviation Services, ticker code AQZ. Next one is AVG, Australian Vintage. Again, just looking for a breakthrough. I suggest probably waiting for a breakthrough 64.25 here, but that short-term and long-term trend looking very good. Commonwealth Bank, I did note in the media earlier this week, for the first time, all four major banks coming up on my scans. What does that tell you? I like ANZ, I think, is the best one, but CBA matching that now. It's come up as a buy here, and we've seen this strong move through this long-term level, a pullback. Would be nice to get more of a pullback, but sometimes when the demand is that strong, you won't get it, and we're now pushing higher, so happy to buy CBA at current levels. CPU, again, one of those emerging trends, again, pushing through the long-term resistance, coming back, testing, and going again on a break through 1460. I'm happy with that one. EML, I don't want to sound like a broken record here, but it's a very similar setup. Happy to go on a break of, I'll give you the level here. That high is $3.99. Let's call it $4. Galaxy Resources, this is what can happen after these emerging plays play out. It's one we've featured in Think Technical before, and it would have probably been around here, I'm suggesting, and in fact, I'm correct, 27th of August is when we featured in Think Technical. It's exactly the setup that we're looking for. Break through that long-term resistance zone, come back, test with a strong signal in a short-term uptrend, and that's where we're looking to get involved. And I'm not saying the ones I've talked about already that are shaping up as this are going to do exactly this. It'd be nice if they do, but it just gives credence to the methodology. And look, happy to continue to go with that one. If you're on it, stick with it. If you're not, have a look at it. Oh, there we go. Broken record again. IVC InvoCare, the funeral home showing some life. Yes, terrible attempts at humour there, but looking constructive for that breakthrough, the long-term downtrend, pull back, hold, and go again. Happy to go at current levels. Macquarie, this is more of an established trend rather than emerging trend, so just following the trend on this one. It has been featured before in Think Technical. Happy to go on it. NRW is one we featured in Think Technical. I'm going to say, I'm just guessing. I mean, I know it says 28 October there, but I'm guessing it's here because that's exactly what I'm looking at for these emerging trends, and it's done really well. I would stick with it. Oracobra, I'm not sure if we've covered this one. Maybe we have. Doesn't ring a bell, and it doesn't have any marking, so maybe we haven't. But look, it looks very good for a continuation of the continued move up. I know it looks scary, but sometimes when they're that good, they're that good for a reason. Service Stream, hey, if you're a bit more conservative, maybe this is the one. Again, that emerging trend in place. Happy to go at current levels. SVW, I know this is one we have had before, and maybe it's in here. It could have even been earlier, maybe even around here that we featured it. It's now an established trend. It's gone from emerging to established, and would definitely stick with it. Happy to get in around current levels. And WiseTech, we've definitely featured this one before. I'm guessing probably around there. It does say 28th of October and also 8th of October, which is probably there because same thing. It's broken through. It's downtrend. It's come back. It's tested. It's showing price action in a short-term uptrend, and we're looking to go. So happy to go with that at current levels. So I know that was a quick whiz through the technicals, but given the time and wanting to get this one out as quickly as possible, it had to be quick. There are more updates in store for today and through the week. You can check them at the market news section of the website. Follow me on Twitter or the Think Markets handle there, and we've got a bunch of upcoming events, some of them this month, some of them next month, given the break coming up today. You need to register for this one. Get out there. If you are a fundamental analyst, this will change your view on what you need to do. It's a very practical look at how to value a stock. On Monday, the weekly think tank as usual, and then heading into January, the webinars to kick off the year. You have to go to the webinars section of the website and register for those. The disclaimer before I leave you says that everything we've talked about this morning is general advice. Please read all of these items very carefully. Don't forget, we are a regulated Australian broker. We do have some products that could see you lose more than your deposits. If you've got any questions, give us a call. Consult the website for further details. That's it for me this morning. Hopefully you got lots out of this morning's presentation. All the best for your trading until we catch up again. Bye-bye for now.